Want to go over what's working best in this market. The stock indexes, we focus on those the most. We say they are challenging to trade, but in reality, the stock indexes, they have been challenging to trade this month. We're down on the month on stock indexes, but they're holding their worst case drawdowns. If you take a look at them individually in the individual portfolios, if you look at those, and if you look at the stock index portfolio 27, the last change is July 1st, 2021. Been one of our stronger portfolios. Adaptive moving averages contributed to that. You see the worst case drawdown for this is February of 2021. And so this is held up in the current market conditions. It's actually bounced. And so over the last five trading days, it's had 4 winning days and 1 losing day, and it's up on the week pretty close to break even, around break even. $100 on the week is break even in this type of portfolio. Probably had some extra slippage in there, and real results are down because we've had extra volatility and slippage in the trading. So hypothetically speaking, though, it's around break even, and it is up in the last 5 days overall. And so it's held its worst case drawdown. So what else do we look at in this setup? Let's look at the 200K portfolio. It is at a worst case drawdown. Let's look at the stock indexes on their own, and you can do that by removing this. So if you look at this 200K portfolio, if you look at the stock indexes in a 24 out of $32,000 drawdown, and how often does it do that? Well, it's done that before. It's cyclical, and it may come lower in this higher volatility. It's down on the month. It's had losing months before. You have a $15,000 losing month there, $16,000 losing month, $13,000 losing month, $12,000, $18,000, and so you have losing months in this setup. And it has drawdowns this size, so it's not abnormal to have this. We are having higher than normal volatility though, so it is hard to trade right now. So if you just look at the stock index, if you just trade the stock indexes in the 200K portfolio, you're 8K away from the stock index drawdown in the 200K portfolio. And I will undo this button to make sure those are added back. So those are added back, and you can see that we're in a worst case drawdown, and we had bigger losses than this today. We had automation errors and massive slippage, and that caused about a $3,000 additional loss beyond the portfolio results. And in the 50K portfolio, we were trading the 50K as well as the micro NQ today. So the micro NQ had a down day, so that increased our losses, as well as the platform outages and extra slippage. So I'm going to go over the micro NQ portfolio as well, micro NQ 20. This is the stock index portfolio, or the stock indexes in the 200K, or the micro NQ is what I recommend. And now you see this big worst case drawdown that's bigger than what we've shown in the past. That's because we have data in here that goes back beyond 2016. I've said that this does not work prior to 2016. And if you look at this drawdown curve, it is right at 27,000 in mid 2016. And from that point forward, as it starts working its way upwards, there's not more than a $4,000 drawdown, even though it starts down here at mid 2016. And you can see that if we go in here. I've highlighted the cells from all the cells in here prior to July of 2016, and I'm just going to hit the delete button, and I'll undo it. You can see how you can see that in the drawdown curve by customizing that range, by going into the daily P&L and deleting all the data prior to what you want to look at. And so you can see this is actually a strength. It's in a 2,000 out of a $4,000 worst case drawdown from mid 2016, and so you risk 2,000 to the worst case drawdown, and you want to make sure you can buffer that worst case drawdown with at least 1,000 to 2,000 extra dollars. So if you start here, you could risk 4K per unit or 3K per unit to start. And that's what we recommend for the 50K portfolio. That's what we're doing in our 50K portfolio trading, is 1 micro for this micro NQ portfolio. And what we're doing in the 200K portfolio is 2 micros per micro portfolio NQ. Tomorrow is the Fed meeting, and other things you could trade in this market if you have the 200K portfolio. If you still want to trade the 200K portfolio, how far are you going to let it drop before you get the bounce? You could get the bounce back, but I think the stock indexes will give you the best opportunity to have a bounce back. You don't necessarily need the other markets because they don't really give you as many big gains. Every now and then you get a big gain, but if you remove gold and if you remove soybeans, you are in a 22 out of 25K drawdown, 2,500 from a worst case drawdown, and that's what your equity curve looks like. Gold and soybeans have been tough. If you just look at soybeans, it's done terrible. Let's look at gold and let's look at just soybeans, and then just look at gold and look at those two together, and you can see so soybeans has really really done poorly. It did really well here. We came into 2021. We said we're going to trade some soybeans, and we were right. And then soybeans decided to be difficult to trade once again, and so we're way down here at this drawdown level, which is much worse than the past. So soybeans just not really that worth trading right now. Also gold. If you add gold and soybeans together, you're in a 23 out of 35. I guess gold to bounce back maybe some. It's been worse. But if you let's just look at gold by itself right now. Gold is in a 14 out of 35K drawdown, so it could bounce back. It's done this before, but I don't think we're going to get a lot of big gains from gold. Gold has been sloppy. I don't see it changing anytime soon. I could be wrong, but most of your big gains can come from your stock index strategies, and I think that trading just the stock indexes, S&P and Nasdaq in the 200K portfolio, or trading the stock index portfolio, or trading the micro NQ portfolio to scale is the best approach that I see right now. So even though the stock indexes are difficult to trade, they're still our strongest market right now. And if volatility increases beyond what we're seeing right now, it may pay to not trade at all. So that's the late night portfolio analysis that I'm looking at. Continue to do research and always find better ways to trade. But if the markets have extremely wild swings, it's pretty hard to day trade them. If they're extremely unusual volatility, way beyond the norm. And so wanted to share this with you tonight. I'm going to update this portfolio calculator through January the 25th. You can download it and test it out on your end. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.